touched on the Q2 GDP numbers. I mean, they came after the market hours. Below expectations. I think the lowest estimates were accounting for about a 6.2% year-on-year rise. GDP numbers for Q2, the GDP growth rate was about 5.4%. Manufacturing has slowed down considerably. Consumption is lacking, especially in the urban sector. Do you think that will hit the sentiment or dampen the market mood come Monday?
Definitely, it will have a sentimental impact on the market, but I don't think it's going to be a deep impact. What actually, Swash, it will have is a significant pressure on RBI to look at interest rates. It's a very, very tricky situation for RBI. On the one hand, US Fed is cutting rates. On the other hand, you have the growth slowing down significantly. And while all this is happening, inflation is very high because of food inflation. So it's a very tricky situation for RBI. The economy demands a rate cut, but prudence and inflation probably is hinting at not doing that. So I'll be watching what RBI does, in early December as far as rates are concerned. The conventional wisdom was that February they will look at a rate cut, but not in December. But these GDP numbers definitely puts incremental pressure on RBI to do something about the interest rates. As far as the numbers are concerned, I also agree with Avinash that Q3 and Q4 should be better. We all know Q2 was, really, not things were not working for multiple reasons, and that's pretty much getting reflected in the numbers which are coming out. Festive season and Q4 normally are good quarters for Indian economy and Indian markets. Let's see how the numbers pan out. My belief is numbers will improve, but a couple of things need to happen. One, the food inflation needs to come down for the economy to really progress. And two, the urban consumption somehow needs a boost.
Right. Now, Avinash, Sudip thinks RBI is not going to go for a rate cut. What is your opinion? And he's right in pointing out that, they need to do something at this point, right? The GDP growth rate, it's at almost a 2-year low, 7-quarter low, and inflation keeps climbing. And the thing about inflation is we keep on focusing on food inflation. Do you think it would, and food prices are super volatile, especially, during these months, during the months of Q2. Do you think it is actually prudent to look at food inflation, or would you think that RBI would be better off focusing on core inflation at this point?
Well, I think, food inflation is a very important component in the WPI. And I think my sense is that, RBI may looking at a neutral stance as of now. Of course, what commentary comes from the governor is very important. But I think they would obviously look at more data points. I think currently the global geopolitical situation is getting a little bad. I think you're hearing that Russia is putting, more pressure on Ukraine. And if that happens, then I think, again, globally crude prices could go up. So I think, apart from the food inflation, the other macro factors, the global macro factors are also going to be very important. And I think what happens on the US Fed front side, I think there also bond yields have touched high. So, obviously to expect rate cuts there also is a difficult, kind of a proposition. But my sense is we'll have to wait till maybe another couple of months, Suyash. A rate cut may not happen immediately because RBI has already warned that inflation is not up to their comfort levels. And now with this slow GDP data, I mean, we'll have to retrospect the numbers as to what is the real issue. My sense is that third quarter should be reasonably good because festive demand has been very strong. And I think that should be reflected into better corporate numbers for Q3. So I think let's wait and watch. But in this policy, probably on the 3rd and the 4th of December, I don't think you're going to see any big rate cut change. The commentary would be more important to watch out.
The commentary would be more important. Both our experts don't believe that there would be a rate cut, but I want to stay on, what the RBI does and what Fed does. And Sudip, if Fed does go for a rate cut, let's say the consensus view is that they will go for another 25 basis point rate cut. So there would be so they would have cut actually interest rates by about 1%. We have not gone for that monetary easing just yet, and that does make our market much more attractive to foreign institutional investors. Do you think perhaps is that something that RBI may be also thinking, and could that also bring in some of that foreign institutional investors who have been incessantly selling all through the last couple of months?
I don't think so. I think if you look at the returns, US market has given fantastic returns. And, if you now calculate, they have given better returns than even India. And look, the global investors are very comfortable investing in US. Why should they invest in an emerging market which doesn't match even the returns what US market is giving? So, it's very difficult to assume that by keeping interest rates high, we will be able to attract incremental liquidity. I think that is not going to work out. It has to, the way I look at triggers, I think Avinash touched upon it. The Trump administration will take a lot of policy decisions, which I also strongly believe will favor India. May not be directly, indirectly. Imposing higher tariff on Chinese goods will automatically favor Indian goods. So Indian exporters will benefit and things like that. These are the things which will make Indian companies more attractive in the eyes of global investors. And that's when money will start moving into India, not because we are keeping interest rates high.